The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Tuesday edition, February the 19th. February the 19th. I'm just remembering somebody's birthday in my family or somewhere. I'll have to review that. All right. So, my pleasure to be here, 11 o'clock till noon Eastern Time, Monday through Friday. Of course, yesterday was President's Day. Nice break from everything. And let's see. I had a couple of things. Yes, I heard some reports today. First time that the S&P has moved for, 6 consecutive weeks to higher highs every week since 1967. So I thought I'd grab the chart of the Dow. Oops, that's an arrow that's upside down. And I'd look at it based on the ChapmanWave methodology, see what we've got. And here we go. So, first of all, let me give you the numbers. Thank you, Steve, for 2 great hours. Of course, straight after this, you've got, what have we got today? Oh, Options Hour. That should be very, great show. And so, let's see, got Options Hour. Then we've got Daryl Martin. We've got Dave White. We've got Ken Shreve and then Tom O'Brien. Yep, that's the Tuesday lineup. And fabulous shows going all the way through until 6 p.m. Air at TFNN. And, of course, my service is the opening call. It's a comprehensive daily service. It's called the opening call. Charts start going out to the site, to the TFNN site, way early from about 6:15, 6:30. I already start sending charts out. And those charts have to do with the Dow. In fact, what I show always is the Dow daily chart. I give a description of what's going on, what I'm expecting, what would happen if there was a new recovery high, which there was today. I have to call this, it's G/C, but I really have to call this leg C to the upside. Still within the confines of exactly what we are looking at. Now, something that's very important is that for my opening call subscribers, I have certain techniques that I've added, proprietary techniques. Now, some of these techniques are based on other people's work. A lot of it is my just purely original concepts, like the ChapmanWave methodology of counting each successively higher peak. But there's a guy called Richard Arms who's developed the Arms Index. I can't even remember how it's supposed to be used anymore officially. I've just used it completely different to Richard Arms' way of using it for years and years now. And over the last 3 years, I really just don't even want to spend the time to go back to check. The last time I checked on the most strictest rules that I've made up for this particular, what I call the ChapmanWave trend gauge, there was a 92% accurate, 93% accuracy rate. If I gave it just a little leeway, because what it says is at a certain point, if the trend intraday goes to a certain level on the upside or the downside, I have techniques that follow immediately. One is, if it's to the downside, it's within the very next session, that I'm expecting at least weakness before you get strength. That's exactly what happened today. What I've begun to do is just to mention the times that it hasn't worked, and I think it's worked. It has not worked 3 times in the last at least 6 months. 4 times if I include when the Dow was up 300 and something points and then pulled back all the way to only plus 80 and then closed up about 95 or 100. So if I include that, because believe me, that's a pullback of great magnitude, then it's 3 times. Otherwise, it's about 4 times. So it's got a huge percentage accuracy rate, and this is what I try to give subscribers every day. So if they had been watching this particular index and been able to gauge how it works, I tell them the following session, where it is and what it does. Then there was another technique that I use when it closes above a certain, where intraday it goes above a certain point, the trend gauge, the trend index. And what it did was just recently it did that, and then the Dow actually did close nicely higher intraday. So it has a very good accuracy record. And because of that, we've gone to, I have to call this leg C. The stochastic is at 74%. The MACD is not so great, but I would not be surprised if there's a bit of a pullback maybe tomorrow, and then there's just one spike up. And then I would not be surprised to see a rather sharp pullback. And the pullback could go towards the body of the this oval formation towards the 13,852 area in the down. That's going to be critical. You go close underneath that, something else is happening. Now, what's really interesting is that chart from the low was actually October of 1966. And that low was in the Dow at 735.74 on the 10th of October 1966. Fabulous move. Goes peak A, B, C, D, E. Pulls back, makes a cup formation, has a retracement rally that goes slightly, just fractionally higher, about a point higher, goes to a peak F, and then it plummets down, starts an up channel, and that up channel from the, let's make it over there, the up channel from the start of it goes where? To peak A, B, C, D, E, and it stops right at F, 9th of February 1967. This is now 2013, so that's 33 plus, that's 47. Is that about 47 years? 47 years. And now we're comparing this chart. Well, in a way it's correct, and in a way what it's doing is it's a different chart pattern because it's gone to a peak F top, and that peak F top concluded, let's see, on the 4th of January 1967, the Dow was at 776, started a brand new up move, and that move went 1, 2, 3, 4, 5, 6. 6 bars, very sharp, very strong, to 830 something, 839 on the 12th of January. That's a huge move in a single leg A. Then it pulls back and immediately goes to B, C, pulls back D, E, and F. So now you've established that resistance point, and it pulls back again to 827 on the 28th of February, and then it goes to another high underneath that previous, underneath the up channel resistance point. But if I do what I normally do, and that is to put in a inside track red line, and that's where it was repelled, just underneath it. And what does it do? It pulls back, and it goes to where? It goes to the support level, and it starts a brand new move. So, yeah, choppy move all the way to May the 9th, May the 8th, I'm sorry, May the 9/15/31, yeah, May the 9th, 1967, and then it has a very sharp plunge. It goes underneath the up channel support, goes to 838, and then starts a brand new move to the upside. So we're looking at a situation here where, yeah, we could have a very choppy ride from now, with weekly charts saying we should still make higher highs and higher lows. So that's kind of the way I'm looking at it. Let's run the numbers, and then we'll go to our callers. Oh, we've got a bunch of callers online. Let's go to well, I'm first going to say Dow's up 41 at 14,022. S&P's up 5.5 at 1525. Comp Index is up 8 to 3,200. Gold is down 5 at, that gold contract, 1604. Silver's down 39 cents at 29. Platinum's down 3. High-grade copper is down 7 at 365. That is a big dip. And crude oil is down only 20 cents at 95.66. Bonds are up 230 seconds. We're going to go to our first caller. We've got Jack in Lakewood, California. Hi, Jack. How are you?
I'm good, Basil. Don't put me in California. I'm in Colorado.
Oh, I'm sorry. That was a mistake.
Man, you bet.
Oh, it said CA instead of CO. Ha!
Yeah, man.
Al, you don't usually make those mistakes. Anyway, so, all right, you're in California, yes. You're in Colorado, not California. Oops, my mistake. I was actually looking at the chart when I said that. I shouldn't have taken my mind off what I was talking about. All right, you wanted to look at?
SAND.
And now what's the story?
Oh, man, she broke hard.
Yeah, you remember, I think we were talking about this, right?
I was talking to you about this maybe 3 or 4 weeks ago.
And what I said was, had it made the peak D when we spoke? I think it had made the peak D, right?
Yeah.
And I said, be careful because it's got a pattern in the. This is I hope I can find it. This has got a pattern that I call it's an arch, which is really the lowercase h pattern. Folks, if you're looking at SAND, S-A-N-D, trading at $9.79, down almost 10% at minus 107, I was talking about this with Jack in Lakewood, Colorado. And there was a doji candle at 13.25. It couldn't make a new high the next day at 13.23 on the 22nd. And then it pulled back sharply, a single move down, a leg down to 11.41. And then it created this arch formation. And I was saying, be careful, because if it takes out the left side low of 11.41, I believe I'm correct when I said to you it would try to go towards, if there was a coincidence of 10.91 in the left side low of the 20th of December, but if it breaks that low that I was talking about of 11.41, then the 200-period exponential moving average was at 10.99, so 10.90s would have been the first target. I think that's what we were talking about, right?
Correct.
So now this is the issue. It's still very weak, but now I can actually put a down arrow, even though the month is not finished, because the steepness from the peak F top that I've got says that there's a really good chance that sand has made a pretty significant top, and that until it tests the weekly chart support level, I would say round about 951, it's at 979, that's going to be the first support. But if that goes, there's like a left side, right side price time match, which says that this thing could even go towards the $8 to even $7.58 low back in June of last year. I'd be very hesitant to do anything with this right now. I need to see it find support. The whole area, Sandstorm, Gold Limited, the whole area of gold, I think they are now we've gone from initial sellers, and remember I was talking about that pattern for a long time, peak F in the monthly top of the GLD, and there's a peak F top in sand, and I was saying that if this is really a longer term price and time situation, then we won't find a real decent support until there's a test of a pretty decent low. It'll probably turn when just out of the blue it has a kind of a capitulation down and a V-shaped bottom, and then something like a sand will try to come back to 1143, the 9-period moving average. 1099 will have to be broken, but 1160s to even 1180s could be a huge V-shaped reversal. And then I wouldn't be surprised if it heads down again. Whether or not it makes a new low is going to be an issue. I wouldn't be touching this right now, Jack. Hold on. I think you're looking to buy, right?
Yeah, well, yeah. I just want to, catch it on the way up and catch it on the way down. All right. You know what I'm going to suggest?
Have patience. Don't do anything. Let's do it again Thursday or Friday and see if it's trying to find some support, okay?
All right, Basil. Thank you.
And thank you, Jack from Lakewood, Colorado. We'll be back with Jack in Tucson, Arizona, straight after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and Dow's up 49, S&P's up 666, and I meant to mention that the dollar is up 7 cents. This is, in fact, for the dollar, just 1 second here, DXY, I think it's leg D, it's D, and there's an exact, I'll talk about this after we've gotten to our next call. 32 bars on the left, 32 bars on the right, and it's testing it in an equal time frame. We will go to our next caller. We've got Jack in Tucson, Arizona. Hi, Jack. How are you?
Good morning, Basil. I'm fine, thank you. How are you doing?
I'm doing well, thank you.
Good. My concern is the Nikkei 225 average. What's it doing? Is it going up, down, sideways, whatever? I'm short on it now, and I want to get long again. And I want to know when, at what price maybe.
Okay. So just when did you go short? You just went short?
A week ago. I think it had three down days, an up day. So
you're actually just down a little bit right now. Is that correct?
Well, I'm not down at all. I'm down.
Oh, you're not? Okay. That's good. You know, this is a very interesting thing because... Excuse me, just had a cough there. I managed to get my earphones off and my speaker out the way. I've got a peak. This particular chart pattern is just everywhere. There was one, I don't know if you know that I talk about a long leg that goes up, and then the oval body, and then you start the neck and the head and the beak. That's this pattern that I call the stalk leg. Well, the oval body in the Nikkei, I'm afraid I have to go to the futures right now. For some reason, I don't have the index itself. I do have the futures, and I do have the continuous contract, but the futures are giving me a great deal of information. That's the reason why I asked if you were down, because the futures maybe are just a little bit ahead of the actual index itself. Now, what happened is when the index made a new high in the futures, this is the NKH, the March futures, for the Nikkei 225, the futures based on the index, the high of 11,535 on the 11th was D. But in fact, what's happening, and I'm noticing this in a number of charts, there is a second oval formation occurring. That's happened before. Now, I wonder if I can just go to the chart to have a look at it. Is that right here? Where was it? I looked at it this morning. Oh, I hate when I know these charts patterns so well, but sometimes I don't remember exactly in which chart it was that I was looking. Oh, IWM, I believe. IWM? Yeah, IWM had something similar to this in that it had one pattern where it went sideways in that oval formation and briefly broke above, made a tiny little kind of head and beak pattern, and then immediately corrected and started a brand new one, and now it's in leg. I'm calling it for now leg F in the daily chart, making a new high, but the technicals of IWM are very, very strong. So let me go back to the NKH 13. I like to match chart patterns to say if it's happened in others, there's a good chance it could happen again. So what I'm looking at here is that there's a chance that the Nikkei has one more pop to the upside. And that's, if you don't mind, I'm going to kind of benchmark it against some other indexes. If I look at the SPY, let me get rid of some of this so it's not so messy. The SPY is an alternate wave count. Now, this is interesting because I have the SPY in leg C. Well, G/C. That's the same as the notation that I have on the Dow. So what's fascinating to me about this particular pattern is that it constantly defies the bears by not going very much higher, but just high enough to keep it in play. Now, what's really important about this is that I'd like to go to the continuous contract, to the weekly chart, because I think that's really what, for the position that you have right now, you need to see weakness in the weekly chart to be able to say, I have a good chance of a pretty decent sharp pullback. Now, the extension of the leg that's gone up since the 16th of November in the weekly chart is just a single leg that's gone up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 10, 11, 12. This is the 13th week. So the law of averages would say what? That you have a really good chance on a pullback here, except there's one problem. The chart does not know about the law of averages. Give me a second. I'm going to see if I can do a little bit more work. I'm going to try to find the Nikkei, if I can find it as an index, because I'd like to talk apples to apples with you rather than the futures. So hold on a second, and I'll be right back, Jack, okay?
Okay, thanks.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We're back, and I'm just finishing the notation of the 120-minute chart of the Nikkei 225 March contract, and I have not been able to find. I'll call the trade station. I really should have that up here.
I think the symbol is NKY.
Oh, that's right. I've done NKY. NKY. There it is. NKY. There it is. Right there. Thank you. But it's at 14.52. So it is 1/10 the price. Am I right?
I'm not sure.
Yeah, it's the same chart formation. Okay. Well, isn't it? It's not really the same chart formation. This is going to be interesting. Okay. Give me 1 second here. This is a Maxis Nikkei 225 ETF. I'm just going to quickly put in the NKH 13. Yeah, it's a little different. I'm going to go if you don't mind, I'm going to go with the futures because the chart pattern is so similar to the others. This is what I'm going to... Now, I have a couple of questions for you. You don't use options at all, do you?
Yes, I do.
Okay. So,
I'm actually in a mutual fund this time.
Okay. Oh, so you're in a mutual fund?
Yeah.
Do you know
it's not a good one, but it's the one in my program.
Do you know the symbol for the mutual fund?
Yeah. I do know it.
Okay, while you're looking it up, I'm just going to explain to folks. Just yell it out when you get it. This oval formation here says there could be one more pop-up above the previous high of 11,535, and you're going to be somewhat careful. You found it?
No, it's not near me now. It's PKPIX, I think.
Say it again?
NKPIX.
NKPIX. All right. I tell you why I'm asking. Oh, I know what the problem is going to be. The problem will be I will get the same data that I get in the continuous contract, which will be just a single data point for the days. The weekly will match what I've got. So then let's do this. Okay. First of all, the USD JPY. Oh, that's the pattern. I knew that I was looking. God, I know my patterns. I just don't remember the symbols always. Well, I know my symbols. I just don't know the pattern with the symbol. This is exactly, if you're looking at Tiger TV right now, you will see that I've already drawn exactly what I drew in before with the USD JPY, which is the currency pair. Now, I have the currency pair at possibly a peak F/B at the top. It kind of matches what I'm looking. That says to me that we are very close in the daily chart to some kind of a pullback. The weekly chart is really powerful, but that doesn't mean to say that the daily can't drag that weekly down, because the weekly, we've only just started the week, of course, but the weekly so far has not made a new high of above 94.450. If it does that, it extends leg D. This is what I'm going to say to you. There are two strategies that I'd be thinking of right now. One is that I believe you are really close. We are really close to some kind of a consolidation in the daily charts of almost all the indexes. I can't say that. I can't tell you the depth of any pullback yet. I need to see the first really strong pullback to the downside to be able to start to gauge it. Otherwise, I'm really just guessing. But if I look at, for instance, GE, which are in our portfolio in my opening call, we are long, is actually at a new recovery high. In fact, it's at a new 5 or 4 for a 5-year high. IBM acted very well the other day, but it's still only in a very sideways. I just don't think IBM is going anywhere. I think it's more lower lows and lower highs. But Triple M is acting outstanding. It just broke out. I have to call it leg C, and UTX is in fact also in leg C, very strong. So I have to look at this and say, I can't really get a sell signal on these particular stocks, very important stocks, until a little later in the week. And that now corresponds very much to what I'm looking at in the Dow. And you know that the Nikkei, for the first time, has actually started to trade very much like the Dow. In fact, it's been a tremendous run in the Nikkei from the 8,500s in the futures to 11,400. That's 300 points. That's a 33, whatever it is, 35% gain. So I believe you're close to a pullback. The reason why I asked you the question about options is that we have Victor Jones coming up in this next hour. He might be able to give you some kind of a strategy so that you are in the correct position, but just in case, and we don't know if the Nikkei is going to break above the previous high of a week or so ago and actually extend. That's what the concern would be here, that it extends a little higher. I don't think it's going to, but thinking and knowing are two separate things.
Right.
And since you're in a mutual fund, you know that
but I can trade every day in the mutual fund.
You can't. You have to wait, right?
No, I trade every day.
Oh, you can. Okay.
Yeah.
That's what I wanted to know. Okay. Well, if that's the case, this is what you really want. I'm going to base it on your NKY. on the NKY, because that's something that you can really get a handle on, the NKY needs to close underneath. It's at 14.52 right now, and it's NKY is the symbol. It needs to close under $14.30. 14.38 was the last low of importance on the 14th. It needs to close under that. If it closes under that, I wouldn't say with great confidence, but I would say with about a 60 to 65%, not certainty, but more positiveness, I would say to you, if that happens, the NKY will fall towards the 1420s, and if it takes out 1420s, it could retest the 1410 low, 1408 to 1410 low of the 23rd. My big concern is that if the NKY breaks into the 1460s, 1465 area, it could move a little higher.
Yeah.
So that's my. So I want you to give you very succinctly the parameters I'd be looking at, and I don't have a signal yet for the Nikkei as if to say I'm getting a sell signal. I will get a sell signal. I don't know if you look at the futures at all, but if you do look at the futures need to. Oh, I just did it again. NKH13. The futures need to close if they're 11,435. They really need to get into the 11,230 area. They need to do it by Thursday or Friday.
Okay.
So I hope I've given you a sense. But the reason why I wanted to mention the potential for options is that you might just pose the question to Victor Jones, and he might have some suggestion, so that if it starts to break, you immediately take off your security blanket and you can go with the downside. But just in case you want a little bit of security here, that's the only thing I'm looking at. But if you had to ask me in 2 weeks' time where I thought that the NKY would be, I would say to you, from the chart patterns that I'm looking at right now, I would not be surprised if it's at 1420 or lower.
Sounds good to me. I really appreciate your help here. I'm at a point where I'm totally confused about which way it's going to go, but the futures do look like it's headed up temporarily.
Now, I had in my web...
I can get out today and get back in again tomorrow.
You know, you can always get back in. I would rather take off the risk and lose opportunity than have the risk and then you don't have much opportunity. That's the way I would look at it. That's number one. Number two is, on my webinar that I did a Wednesday night a week ago, whenever I did it for my subscribers, I spoke exactly about what you just mentioned. I said, if you're looking at a stock and you're saying, it looks good. Oh, wait a minute. Oh, but it could also pull back. And all of a sudden you say, I would buy it if it went up, but I would short if it went down. Stay away. Mm-hmm. You want clarity, because it's hard enough as it is, but to have clarity gives you that extra edge. So I hope that helps you, Jack.
Oh, a whole lot. Thank you very much, Basil.
Thank you very much for calling.
Someday I will talk to you again.
Thank you very much.
Thanks,
I appreciate that. Good. That was Jack in Tucson, Arizona. We're looking at NKY, and I thought it was going to be Nike, but let's just look at Nike, because that's an interesting thing. Nike, Nike is not quite the same thing, but Nike is Nike, NKE, Nike Inc. B shares. It's the sneakers and clothes, athletic clothes. Made a peak G top in the weekly chart at 57.40. Did a left side, right side price miss. It hit the inside wedge, ChapmanWave inside wedge resistance line at peak E, and it's just holding. It's not pulling back, but it's holding it. The stochastic's at 89%, and the MACD is still very good. So I'm looking at this, and I think, okay, maybe Nike is making a high-level consolidation. So I thought I'd just mention that because we had that stuff. Now, there are a couple of things. In my opening call, I know that we're getting closer to some kind of a digestive phase. And the reason is, I'm looking at certain stocks that are breaking out, doing really well in my portfolio, and I'm looking at two recent buys, and one has given back a chunk of the fabulous gain it had on Friday. Thursday and Friday, I think it was. Was it Friday? And another one is holding very well, but did pull back a tad more than I thought it should. And that's telling me this is becoming a more and more selective move. Then there are a lot of very low-priced stocks. When I say low-priced, I'm talking about in the 1s, 2s, 3s, 4s, and 5s that have absolutely beautiful chart patterns. Sometimes the problem is volume. Sometimes, it's one of those things. And that tells me we're getting, at least in this particular phase, we're getting to the latter part of this particular phase. And I would not be surprised if that April to May match that goes with 1967 is actually what we're looking at. Then in May, we make some kind of a pretty decent, a healthy top, and we have a pretty decent pullback. And I'm still looking at the monthly charts going higher. Let's go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
I'm very well, thank you.
So I've been watching the gold miners and watching several different gold stocks, and they're all seeming to come down and test this. Test some of these lows.
Some of their major weekly and monthly lows, right?
Yeah, I was looking at GDX as just kind of a basket of stocks, so I'm not trying to pick one. And it looks like it's testing a May low, or pretty darn close to it. What's your thought on these?
So you're looking at the GDX, right?
Right.
Okay, Market Vectors Gold Miners ETF. I can just tell you this, that the low of 39.08, the week of May of last year.
Yep.
We are testing what did I just say? I always have to 39.08. I have to type those things because I'm always looking one step ahead, and then I'll forget the number I just said. There, 39.08. And the low today is in fact 39.28.
28.
If this week we take out and close under 39.08. I have to tell you that the next support level is down at the 34.05 level, but I would not be surprised if sentiment and other things are saying we are getting closer to a bounce in the, let me just see if I'm talking about the same apples to apples here, XAU. Oh, XAU's gone lower in the weekly. Let's see. The monthly has 140.94, and today the low is 141.53. So there again, the XAU, that's the Philadelphia Gold and Silver Index. Now I have a left side. Oh, I can choose another point of contact here. You know what? This is going to be very interesting. I don't have a bar. I'll have to take the low. All right, let's do that. I'm just doing a left side, right side price time match. Let's see if we got that going here. And there you are. Okay, add it to the right. See where it comes out. Oh, it comes out right to today. We have just broken in the daily chart the low of the 24th of July of 142.15. Folks, this is an index went all the way to 196.7. You know, when gold comes down, I've seen this for years. When I first joined TFNN in 2003, I believe it was, I was talking about my XLF, was it the ASA? I can't remember, but one of the gold stocks, Newmont Mining, I can't remember what it was, had given me a major top, I think it was ASA, a peak F top in the monthly chart, and we saw this thing go down and down and down. When gold gives it up, it's just incredible. So what we've done is today we've gone below the left side low in the XAU. This is great. We've gone below the XAU 142.15 low. Today we've gone to 141.53. The bar that takes out the low, which is today, the bar that takes out the low, I've got a little story to tell you. We might be close to at least a bounce in the gold contract. I'll be right back straight after these messages with Mark in Fort Collins. Thanks so much for calling, Mark. This is going to be very interesting. But it might just be a bounce, but I'll explain the methodology involved as soon as we get back. Basil Chapman, Tiger Technicians Hour. Dow is up 51, S&P's up 7. Be right back after these important messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you could be granted one wish when it comes to trading and investing, what would it be? Would you like to learn how to make consistent profits on a continuous basis? I'm Steve Rhodes with TFNN, and recently I discovered a trading pattern more powerful than anything I've ever experienced before. This pattern works on all instruments in all time frames, and on February 20th from 6:30 to 7:30 p.m., I'll teach you how to master this pattern and show you how if you began trading with $100,000 on September 14th, 2012, you could have created $35,000 in profits in 4 short months. This trading pattern will transform your life, and the live online webinar is available to subscribers of my Mastering Probability newsletter. And now is the perfect time to sign up. Plus, if you're not completely satisfied for any reason whatsoever, it comes with a 30-day money-back guarantee with absolutely nothing at risk. This is a decision you won't regret. 60 minutes that will change the way you trade forever. Sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and we're on with Mark in Fort Collins, Colorado. We're looking at the GDX, which, I'm looking right now at the Philadelphia Gold and Silver Sector Index, and that's very interesting because what it's done is it's broken the left side, right side price time match from back in the 24th of July, where the low was 142.15. Today's low is 141.53. Yes, 141.53. Now, my rule of thumb in this huge arch formation, well, it doesn't have to be huge, but in any arch formation where there's a left side, right side potential price time match, and when this goes right to today, is that the bar that breaks the left side low, that is the bar, in this case today's bar, that goes under 142.15, the low of the 24th of July, intraday or the very next session must reverse and try to get back into the arch formation, and that would say it needs to get back to between 143.50 and 146.50, and the resistance is 147.80. Now, to do that, I'm looking at the dollar, and the dollar is making a potential peak E, which says, if that's the case, then the dollar will be starting to pull back quite sharply. 80.33 is the index's support level. So if that happens, then this market will probably go a little higher because dollar's pulling back, and that's usually quite good for stocks. It's really interesting. In fact, it's interesting that right now the market's rallying and the dollar's rallying with it. So let me go back to this. And what I would do is I'd be hesitant to play anything on the upside in gold. There's only one reason why. Although it could have a very nice percentage gain, GG is trading at 33.67. It's got a candle here that says, I'm ready to bounce. I might even bounce to the 34.78 level. My biggest concern is that once a major trend is in place, and this is a major trend for gold as far as I'm concerned, I've been talking about it for a year now, a major trend to the downside. Once that trend is in place, there are these sudden air pockets where you don't even get a chance to get out if you're long as a trade. So my suspicion is you're looking at something as a potential bounce to play?
Yes.
All right. If you're going to do that, I don't know if you would go with the index, or you go with you're a stock, or you're looking at the index, or what?
I was maybe looking at a fairly, about a month out call on the GDX if it tags that 39.08 and holds.
Okay.
Volume.
So what I would do is I like that strategy because you got 1 foot on the accelerator, 1 foot on the brake, and you're putting up very little money. I like that strategy. What I would do is I'd probably have a little patience. If overnight you see the dollar start to decline, gold stabilizing, that's where it might work. So on a 120-minute chart, we're almost at a level of 39.34 to 39.09 to say, hey, we could be ready for a bounce right here. But I still would say I treat it as a bounce. If it extends longer in time, maybe 2 weeks to 3 weeks, then the dollar's going to be pulling back. This is a very tricky time right now because there are a lot of, my stalk leg formation says every decline is met with buying. We've just seen that for days and days and days. And then when there is a decline, it doesn't last for more than 1 to 3 days. At some point, we're getting real close to where we're going to get the 5 to 7 or 7 to 10 day pullback in the market. But looking at the gold, your question was on gold and the GDX, I think you are really close to doing it as an option. So those are the parameters I'd be looking at. What you want to see very quickly, you want to see it get back to 41.06 or higher. That'll be successful test, and that could be good. So, we've got David Keir doing Victor's show today. Stay tuned, folks. Thanks for calling. Ooh, cough, cough. I'll be back tomorrow. Thanks for being here. Don't forget my opening call. That's right on the front page of TFN. You can get 2 weeks free. I'll be back tomorrow.